Gamfin as the head of operations and M&E manager. Today's webinar is hosted by Gamfin and Kaplas through our partnership with MasterCard Foundation. And the whole idea is to strengthen Ghana's non-bank financial sector. The program is called First Plus, which stands for Financial Inclusion, Resilience, and what does First Plus does, or what is it all about? It addresses common challenges across the industry through webinars like these ones that we are having today, other workshops and trainings. Kaplas also provides one-on-one technical assistance to financial institutions or financially solid institutions that are committed to scaling MSME finance. At the end of this webinar, we can assure you that we are going to provide you with contact information if you like to learn more so that we can continue the discussion. Increasing the availability of credit to women is one of the first and MasterCard priorities, and it's especially where so many women are business owners. We are excited to share the webinar about gender finance. I'm here to learn a lot. Today's presenter, Maya Margie. Maya created and led finance and women's economic empowerment initiative at in Lebanon that generated 33% internal rate of returns. She's now SME and gender consultant for the International Finance Corporation, which IFC World Bank Group in Africa, Middle East, and Central Asia. Maya has over 22 years expertise in the financial sector, digital transformation, as well as women empowerment. Throughout the webinar, we encourage you to submit questions for webinar in the chat box, and we'll address as many as possible at the end of the webinar. We are recording the webinar, which will send you a copy of the presentation through our website thereafter, and a self-assessment to review with your management team, and a link to the recording. So, ladies and gentlemen, a lady with greater experience having this afternoon. We are grateful, Maya, to share with us your experience in this win-win-win gender finance. So Maya, you have the floor. Thank you very much.
Thank you so much, Edmund, for this beautiful introduction. I'm actually really humbled and I'm excited to share my experience with you, and I'm happy to see all of you attend and participate today. So thank you for your time. I'm going to start with sorry, is my screen is not moving, yes? Oh, it did. So I'm sorry with technology again, it always happens to all of us. So before I start, and as Edmund mentioned, we will be sharing with you at the end of the workshop a simple self-assessment questionnaire. You can download it, we will be putting it in the chat, and you will then use this questionnaire, and we encourage you to do so in your senior management meeting to be able to assess your gender finance initiatives and your areas of strength and areas of improvement on the following 5 key areas. So your strategy and performance, the organization and HR, your marketing, products and services, distribution channels, and last, and the focus area as well, is the client's data analysis. So you see if you have a gender disaggregated data and what insights you can get from that. So this is only a self-assessment tool that we have simplified for you and will help you assimilate with the information that I'm going to give you in this webinar today to help you improve with your gender finance. So today we will be discussing the business case for women's financial inclusion, so you are aware of the available opportunities. I will explain as well gender intelligence, what is it, and how to apply the gender lens. I will share good practices of other financial institutions' gender inclusive programs, and how to lead on gender finance. So you will be able to identify ways for you and for your financial institution to develop and implement a gender inclusive program. Our objective today is for you to own the gender finance knowledge and know-how and integrate it as part of your activity. So as Edmund said, please write your questions in the chat as we go along and have as many questions as you want. I'm ready to answer all of them. Let's start with gender parity. What if women and men were truly equal? So this question is popping up everywhere in the world, not only in Ghana today, and it has been a global agenda for the past 20 years, maybe. At least in my case, I have been doing it at the bank I used to work with for the past 10 years. And now with IFC, I'm working on gender finance in Central Asia, Africa, and the Middle East. So what's important to share with you is that globally, there's a 2.4 billion women worldwide who are not afforded equal economic opportunities. And this is as per the World Bank's 2020 report on the laws and regulations that restrict women's economic participation in 190 countries. Now, the case for Ghana, Ghana scores 75 out of 100 on explicit discrimination in the law that affects women throughout their lives, indicating that women have just 3/4 of the rights of men. Noting that as per the 2018 PwC Women in Work Index, increasing the female employment rate in OECD countries alone could boost GDP by over $6 trillion. So while our role today is not to discuss the law, we can definitely make a difference when we identify the barriers and the challenges that are faced by women and affect change where we have the power to do so. I will give you an example. So in Lebanon, when we developed the Women Empowerment Program 10 years ago, I personally was discriminated against before that time. So I gave birth to my son 16 years ago. I went to open an account, and to my shock, in Lebanon, women are not allowed to open accounts for their minor children. It is only entitled by law to the legal guardian, who in this case is the father. So having that in mind, the first thing we did at the bank when we launched the Women Empowerment Initiative was to overcome this challenge and find a workaround in the law that allowed us to be able to provide this opportunity to women in Lebanon. So this is the role I'm asking you to play, not to change the law. If you can do that, that would be great. If you can't, you find a way around to be able to solve the problems or the challenges that are faced by women in Ghana. Now that we've established the global opportunity and your role as well, I'll share the business case on women in sub-Saharan Africa and specifically in Ghana, for you to be able to better understand the current context and the available opportunities. The question is always, what's in it for the financial institution? Why should you venture into gender finance? So by the end of this webinar, I would have answered these questions for you. And here is why: the opportunity in sub-Saharan Africa. There are more women-owned MSMEs at 58% compared to around only 30% globally. 42 billion is the estimated unmet credit need for women. This is the difference between the supply and the demand. So banks are not financing women And they mentioned that around 20% of women only are able to access long-term financing from formal financial institutions. As per the World Economic Forum 2018 Gender Gap Report, which examines the gap between men and women across economic participation, educational attainment, health, and political empowerment, Sub-Saharan Africa ranks third with almost 34% gender gap out of 8 geographical regions, preceded only by the MENA and South Asia. So you are better off in Africa than us in Lebanon. However, at this rate, it will take 135 years for Sub-Saharan Africa to close the gender gap. The good news is Rwanda and Namibia rank 6th and 10th respectively on the list of the 10 most gender equal countries. So why not have Ghana make it to the list too? With your help, we will achieve that, I am sure. So coming to the context in Ghana, 46% of the businesses are women-owned, and this is also higher than the 30% global rate, but still only 90%, 90% of the women are in the informal labor force. And this is not a very good figure. We have to see and find a way how we can formalize women and especially women in business. According also to the World Bank 2017 Global Findex, there is an 8% gap between men and women with a bank account. Only 10% of women report borrowing from a bank, which is also a very low figure. And 6.1 billion is the estimated MSME financing gap, which is equivalent to around 13% of GDP. This is for all MSMEs, not only for women. It is also estimated that MSMEs contribute around 70% to Ghana's GDP. So the case here, when we are able to finance MSMEs and women and provide equal opportunities to both genders, we will be able to support the growth of the Ghanaian economy. On the agricultural front, the agribusiness is the largest sector in Ghana's economy and the main exporter and employs nearly half of the workforce. However, in 2018, only 3.7% of the bank's loans went to agriculture. So this suggests that the sector faces a big finance gap, which may be directly affecting women as well. Why? Because the research also shows that women's contribution to agriculture is significant and is estimated to account for around 70 to 80% of the food consumed in the country. So this is why we want to address women's challenges. Now, I would like to ask you, please, to write in the chat what are the challenges and the constraints that are faced by women in Ghana. I'll be waiting for your opinions and your know-how and your expertise on the matter. Who would like to address this question? Can you please write your opinion and your expertise on this matter in the chat? Where to leave their children so they can focus on work. Indeed. Lack of financial inclusion, indeed, as well. Anything else? Okay, so I'll give you the answers then. According to the IFC, 74% of MSMEs are partially or fully constrained. So we're not only talking about women, but men as well are constrained. Now, to focus on women specifically, access to finance is the major obstacle that is facing women because of the requirements of the financial institutions for collaterals and the high interest rates that they demand. Women are unable to access loans, especially that they do not access or have control over land. And the financial institutions lending model is based purely or mostly on collateral rather than on cash flow based lending. Also, I've learned that the value of the required collateral by financial institutions in Ghana is estimated at an average of 240% of the loan amount. This is compared to Lebanon, it's very high. We only ask for around 120% of the loan value. And it's also higher than the sub-Saharan Africa, by the way, as per the World Bank report. We also have another constraint, which is the lengthy process for registering business and opening of bank accounts. I've also read a report by the World Bank, which says it takes 20 procedures and 81 days to start a business in Ghana. Women also lack business and marketing skills, and they tend to have low confidence in their ability to successfully operate businesses. Cultural biases and social norms, we're all affected by those. They govern how the different roles men and women have to play to address the expectations by society, communities, and households and cultures. So these also impact women's economic contribution. And last but not least, as some of you mentioned, the women are the main caretakers of the family, and they lack time and are struggling to balance between work and life. Now, coming to the challenges that are being faced by the agribusiness women, they have similar challenges, and specifically, they have limited access to inputs due to lower access to funds. They have lower productivity and face higher levels of post-harvest loss than their male farmers. Why? Because they harvest over a longer period of time due to their time constraints and their lower access to hired labor. They also face lower access to market information to be able to competitively participate and benefit from markets, depriving them from the first-hand opportunities to generate income. They are less likely to access market linkages, brokers, and traders who are typically men, giving women fewer entries to markets and income-generating opportunities. Women in rural areas, more specifically, may have lower literacy and digital literacy, and they are being limited because they are unable to uptake or adopt available digitally enabled marketplaces. So providing gender smart solutions, such as access to credit, trainings, and access to networks or access to marketplaces as well, will address these challenges and will provide better opportunities for the growth and empowerment of women. The good news is that there are at least 3 reforms launched by the Ghanaian authorities that address financial inclusion, not only on gender, but as a whole for everybody. So the first was launched in 2018, which is the National Financial Inclusion and Development Strategy. And it aims to increase formal financial services inclusion from 58% to 85% by 2023. The second was launched in 2020, which is the Digital Financial Services Policy, and it serves as a blueprint to be able to advance on financial inclusion. And the third and latest was in 2021. Bank of Ghana set up a gender disaggregated data portal. And this is really advanced because still in Lebanon, we don't have the gender disaggregated data portal. And it's very important to be able to close the gender gap. When we look at the figures between men and women, we can see the gap and we will be able to advance on women empowerment. There's also one more thing I've heard that the Bank of Ghana does approve collateral-free loans or unsecured loan lending, but the practice in most financial institutions is that they prefer the traditional way of securing the loan with an immovable asset. So there is nothing that is limiting us from advancing on gender finance. All we need to do is really to put our minds to that and work on a full-fledged program to be able to serve women in Ghana. Now, I would like to share with you some common myths and explain the rationale to demystify these misunderstandings. I will ask a few questions, and please, I would like you to share your answers in the chat and explain why. My first question is, financial products are gender neutral. It doesn't matter if the customer is a man or a woman. Is it true or false, and why? I can see false. So it's actually false. And why is it false? Because women have specific needs and face different challenges than their male counterparts. These are the points we've discussed in our previous slide. So providing gender smart solutions by modifying the existing products we have or creating new ones will lead to a positive business impact. Anyone would like to argue this point, or you're all okay with it? So Edmund is on the clock for me, and I think I was speeding too much. If you think I'm speeding, please let me know, because I'm not always able to see my chat all the time. Is it okay then? I will proceed. The second question is, gender finance is about providing specialized products to women only. Is it true or false? So gender finance is about providing specialized products . Yes, indeed. So I have very good answers. One of the answers, I mean, the only answer is false. Why is it false? Because gender finance truly does not mean providing a specialized product to women only. The financial institution should develop a holistic customer value proposition that is based on market research that attends to the needs and challenges not only of women, but of the imbalances that exist in the marketplace. So for example, let's say you decide to develop a collateral-free loan or to ease the requirement on lending, and you go for cash flow based lending. This will surely be provided to men as well as women, as some may face the same challenges of providing the collateral requirement as men may face the same challenges. So this is exactly what we did at BLC Bank when we adopted our products and services, both financial and non-financial services. We had the woman in mind. So we were developing those products with the woman in mind, but we actually delivered or offered those services to all our clients. And even this is how we acquired new clients, through the innovative products that we developed. So gender finance is not about providing products to women only. How about woman-friendly products and services alienate male customers? True or false? Indeed, it is false. So the answer is also false because, as research shows, in different countries where gender finance programs have been developed and implemented, the male spending was not negatively impacted by the woman-friendly products. And in my experience and what I've seen across the different countries as well, what is woman-friendly is considered everybody friendly. So when we were leading the Women Empowerment Program in BLC Bank Lebanon, to be honest, we had feared that the program will not be well received by our male customers, but on the contrary, they became our advocates for the program and would actually refer us to potential women clients. So there's nothing going to stop you from developing a gender finance program, is there? Now, the fourth question is, since my portfolio as a financial institution is made up of more than 50% female customers, then I'm already applying gender lens and I don't need to invest further. Is this true or false? So from those who have completely false, I do agree with all of you. And thank you for that, because gender finance is much more than having 50% of your customer base being women. Gender finance does not only include access to finance, which by the way should be affordable and accessible. I've heard that the interest rates are really high in Ghana. So we also should find a way of reducing the operating cost and being able to pass on lower interest rates to the customers. But we should also look at financial services, as I've mentioned, and non-financial services or support programs to be able to allow those women to access markets, like the cases of the agribusiness value chain, access information, training that will support them to be able to become viable business models. The question also that you would like to ask yourself, are we addressing the majority of the women's financial needs, or are we only providing for a small part with one loan product? Have you compared your average loan size and or loan period to between women and men in your portfolio? Because statistics from the different financial institutions that I've worked with show really lower average loan amounts and loan periods for women than men. So do you provide support services as I've mentioned, capacity building, create awareness, help formalize the informal businesses, as this is the main challenge for a lot of women. It's also worth mentioning that not only should you be looking at women in the marketplace, but also women in the workplace. Are you supporting your women employees to grow their careers and climb into more senior positions? I'll be discussing this more in the further slides. The last question I'll ask you, investing in gender finance is time-consuming and costly and does not pay off. Is it true or false? Thank you, Peter. It is false. Thank you, Emmanuel, as well. Indeed, it is false, and I'll be sharing with you the answer in the following slides. So, financial institutions who focus on women have found that women are a great and profitable market segment, and I'm talking from somebody who has directly experienced this with BLC Bank. So increase in market share is the first opportunity, because when the financial institution provides relevant products and services based on the needs of the individual segments, they are able to acquire new customers automatically. And also with a well-structured women market strategy, the financial institution will be able to differentiate itself from competition and establish a reputation as an innovator. So in Lebanon, we have like 70 banks for a population of 3 million people. Imagine how much competition we have. So the bank, to be able to differentiate itself from the rest of the banking sector, we had to come up with something that is innovative, that makes us stand out, yet we are also adding value to the economy and to the people in the bank and to the clients. So it is an important differentiator. Second, there is a higher cross-selling and loyalty from women customers because they respond very well to relationship-based models. And they are more loyal clients and they buy multiple products. So they influence as well how family income is spent. So they can impact the increase in the share of family wallet with the financial institution. They can refer friends, a spouse, children who are of age, of course. And globally, women make 85% of the family decisions. So it is quite important for you to concentrate on those women and have them take a bigger share of the family's wallet. Women as well are good savers. They deposit typically higher than men. And the last point is they are lower risk of non-performing loans when it comes to women. So the financial institution can better diversify its portfolio. To back the business opportunities with the number, data from the IFC, World Bank, and the Financial Alliance for Women prove the case. The year-on-year growth rate for 2016-2017 show that women outperformed men in the number of customers growth. So 19% for women and 15% versus 15% for men. The credit volume as well grew more for women at 10% versus 8% for men, and the deposits grew from to 7% for women versus 5% for men. These are all figures of the Financial Alliance and for over 30 financial institutions who are member of the Alliance. On the right side of the slide, you can see as well the non-performing loans. And these are for women versus men. In blue, women show in the chart lower non-performing loans than do men. And this is a study by the IFC as well for around 115 to 133 banks in their portfolio. So the figures do prove the case that women are lower non-performing loans, have lower non-performing loans, and outperform their male counterpart. Edmund, how is it going?
It's okay. Let's move on.
Okay, great. So now to the second section I'll cover is what is gender intelligence and how can we apply a gender lens. I would like to ask you first to please write your answers to these questions in the chat. So the question is, what is gender intelligence and how can we apply the gender lens? Okay, so I see nobody wants to volunteer. I'll tell you myself. Gender intelligence does not mean benefiting from a single, benefiting a single gender, but creating benefits for both genders. It is about understanding the difference that exists between the genders, not only from the biological aspect, but from the differences that are influenced by family, education, culture, and the environment. I will give you an example also for the LC Bank's case. So maternity leaves. Of course, we all know that only women can give childbirth. And on this front, a lot of women from the research that we did in the country, women tend to drop out of the workforce because they don't have time to care for their children and balance between the work and responsibilities they have. So what we did for our women employees was extend a two months additional part-time work, but with full-time pay, so that the mother can be able to return back to work gradually and reduce the rate of dropouts. To balance this with the gender and the men at the bank, we provided paternity leave as well, which was not required by law, so that men can become more supportive and help women with the caretaking at home and the family. For women customers, on the same note, we provided 2 months maternity loan payment breaks for the mother to be able to accommodate for the low productivity after childbirth. So when she has a loan and she gives birth, she can stop paying for 2 months without us charging her delayed fees. And then when she comes back to work, she can proceed with paying her loan in good form. So this is gender intelligence, giving each person what they need instead of giving the same to everyone. And it is about allocating the resources, programs, and the decision at the bank or at the financial institution to be able to fairly treat both men and women. The result will be a win-win-win-win again for the people, for the clients, for the institution, and for the economy. So diversity in the workplace will lead to an improved decision-making and innovation, relevant products and services, balanced leadership and performance, and attract and retain a wider talent pool. And most importantly, it will definitely affect the bottom line and improve on profitability. I would just like to share with you one thing that research shows that women are underrepresented in senior management levels across the globe, and that women are paid 77% less than what men are paid. So it is really important before going out to the market and saying we are a gender finance institution and we support women in the marketplace, we want to look at women in the workplace. One thing also I would like to share with you again is what BLC Bank did on that front. So we set a target to reach 50% women in top management. We developed a scorecard as well to monitor the gender equality on recruitment, promotion, and closing the salary gap for same job positions. As a result, we reached 51% women employees in 2017, up from 47% when we started the program in 2011. And this greatly helped the bank achieve higher women customer sales and increase profitability, because our salespeople, our women and men in the bank became advocates for the program. Now, how do we apply the gender lens? I would like to share with you the definition of the UN Women that says gender lens investing is the use of capital to simultaneously generate financial return and advance gender equality. The three key gender lenses are access to capital, workplace equality, products and services that positively affect women and girls. So having that in mind, there are 6 key pillars to applying the gender lens in financial institutions. The first one is the demand and supply market analysis. So conducting a demand analysis to be able to identify the needs and challenges that are faced by women, identify the segments that you're going to address is very important, and know what is the supply that is available in the market. So this is a prerequisite to developing a successful gender finance program. We don't want to be gender blind. We want to know what is out there to be able to address those challenges. Second, organizational alignment. So it is important to have internally trained people on gender smart solutions and gender intelligence, allocate a dedicated team to lead and deliver on the Women Market Program, and develop the sales and distribution channels, including the digital channels as well. So the third is products and services customization. I've discussed this, touched upon it a little bit, and I will discuss it as well in the upcoming slides, just for the sake of time. We want to look as well into the non-financial services and how can we provide added value to be able to address the challenges that are being faced by women. And fifth is the brand and targeted communication. So how are we going to be able to create the awareness on gender and support the women? How are we going to be able to reach them and communicate with them, help them to become, move from informal to formal businesses? So this is all in the targeted communication. And the last point, or the last pillar, is the data and customer management. What gets measured gets done. We all know that. So it is important to look at the gender disaggregated data before we start the program, establish a baseline where we are, set the targets and where we want to go, and monitor the progress of the program going along. The third section that I'm going to be sharing with you is 2 good practices on women financial inclusion programs that were deployed in Ethiopia and Myanmar. There are as well 3 additional case studies that we will share with you at the end of the webinar, along with the session recording. So you will be having the workshop handouts as well. Starting with the World Bank launched in 2013 the Women Entrepreneurship Development Program in Ethiopia, supporting through the Development Bank of Ethiopia, 12 microfinance institutions. Those institutions acted as retailers to be able to provide products and services to the women in Ethiopia. Now, the program focuses on growth-oriented women entrepreneurs. Those women, the program focuses on growth-oriented women entrepreneurs, where the microfinance institution developed loan products and accepted new forms of collateral to secure the loans. So they accepted vehicles, personal guarantee, and business inventory as forms of collateral compared to the traditional guarantees that a bank used to take. The MFI also shifted to large individual liability loans from small group-based lending. So they were trying to provide enterprise loans to women instead of the group lending that the MFIs are used to. What they did innovatively was the tech-based psychometric credit score, which evaluates the entrepreneur's personal attributes, such as control, intelligence, the impulsiveness of the customer, and the confidence levels, to determine the eligibility for a loan. So the applicant will complete a 45-minute self-administered test without the need to be able to overcome the challenge of collateral requirement. The test will allow the bank or the MFI to identify if this woman is capable of taking a loan without having the need to take a traditional collateral. So they also did something innovative as well, which was the mindset-oriented training. This is a combination of basic training skills with a psychology-based training. The idea is to help the entrepreneur start and behave and think like an entrepreneur instead of the regular only training that they used to do on financial skills building. For women to qualify for these trainings, they must have sufficient numeracy and literacy skills, commit full-time to their businesses, and pay training commitment fees. By the way, on the training commitment fees, this is important because if the commitment fees is a minimal amount, it will make sure that the participant will actually attend to the training instead of registering and not showing up to the training. And this is what we did for BLC Bank as well. Now, the results were very successful. 12,000 loans were disbursed to women entrepreneurs. 66% were first-time borrowers. They were able to reach 16,000 women to be trained. The rate of loan repayment was 99.1%, so very low non-performing loans. The average loan size increased by 870% to $12,000 average loan size per woman. And with the adoption of the improved loan appraisal techniques, the psychometrics test, the value of the required collateral was reduced from 200% to 125%, which is amazing as well. They also measure the impact of the funding and the training on the participating women businesses, and they found out that these women increased their income by 41% and increased employment by 56%. So they were able to create jobs through the participating women businesses. The second case is the UN Capital Development Fund, who worked with 3 microfinance institutions in Myanmar to develop gender-smart microfinance products addressing 3 segments. What are these 3 segments? There's the woman micro-merchant, women farmers, and women-based home-based workers. The segmentation was the result of a market and customer data analysis. And this is what I was reiterating previously, that we have to understand the market to be able to address and define the segments that we're going to be solving problems for. They helped shift the mindset of the MFI from a product focus to a customer-centric one, and overcome the assumption that women represent one single and uniform segment, because we have women in different segments, women in different sectors, women have different needs, men as well. By the way, I'm not ignoring the fact that we have to address everybody to be able to have financial inclusion. But now we're discussing specifically women, as it is important, and it was a left out segment for a while. The recommendations that the UNCDF provided to the MFIs, same as I was discussing earlier, is to focus for the financial institutions to focus on financial independence for these women, transition from a group to individual loans with reduction in the requirements for accessing these loans, to build the MFI's capacity and organization alignment internally, and strengthen their capacity as well in data analytics, which is important, to provide financial and digital literacy training to women, and further develop the MFI's digital channels and tailor gender smart solutions based on the insights from the customer data and the gender market scan. All of the UNCDF's recommendations were to address the challenges that women in Myanmar are facing, from financial and digital literacy to complex loan requirements and mobility constraints. These are the same challenges that are being faced by women in Ghana and women everywhere. So how will the financial institutions or the MFIs apply these recommendations? First, by launching an awareness-raising campaign for women micro merchants to graduate from group to individual loans. Second is to provide ready access to detailed information on individual loan offerings, such as the interest rate, the loan period, the repayment schedule, while also highlighting the reduced registration requirements. Third is to address the complex and time-consuming process of making physical loan repayments at the MFI branches. The MFIs will digitize their credit and loan repayment system to allow women to repay using digital finance. And finally, offer non-financial services, from trainings on financial literacy to linking the businesses to digital marketplaces. The last section would be how to lead on gender finance. And it will not be too long, but this is a very important section to be able to identify ways of how you can apply gender finance. So the first thing is applying a go-to-market framework, starting with an internal and external analysis. I've mentioned it earlier. I will mention it again because this is critical. Examining your internal practices to improve on gender equity and gender equality. Conduct an internal customer data analytics to better understand your women segments and your policies and procedures that may be hindering the acquisition, such as the loan rejection rate, acceptance of movable assets as collateral. Define the segments that you will be targeting, and accordingly conduct a market analysis and focus groups to be able to better understand their needs and identify ways to address those challenges. Second is adapting and developing both financial products and non-financial services to provide solutions to the women segments. We recommend applying a human-centered design process to modify products and underwriting practices to better serve at least one woman segment. So if we're not able to address all the women segments, we can phase out the program, start with one segment, and then roll out to other segments as we grow. If you find the need to access training in human-centered design, then please check Acumen Academy, who offers online training at an affordable price. I think right now they just are asking for a donation of $40, but you can take the course for free. We also recommend encouraging saving groups and women customers with literacy and digital skills challenges. You may as well use Hey Sister, Show Me My Mobile Money. This is available online for free in English and several Ghanaian languages. So it will help you quickly provide literacy and digital skills to your client base. Third is resources, assigning a dedicated team to handle the women segment, train the staff on gender intelligence, develop the sales and distribution channels, website, call center, branches, digital banking, agent banking, set the KPIs and the targets to be able to monitor the progress of the program. Fourth is partnerships. Develop partnerships with different ecosystem players, such as women associations, chambers of commerce, and government entities. But you may as well develop a B2B partnership with wholesalers to finance women MSME distributors. I would give an example like women MSMEs in the fast-moving consumer goods or home appliances, or maybe a green or eco-friendly solar products for agriculture. You may as well develop partnerships with retailers for consumer loans, such as mobile phones and computers. As for communication, develop the media plan and the marketing material needed to create the awareness on the products and the support that the financial institution is providing, and communicate both externally and internally. I would like only to recommend one thing here: no pink washing, please. Do not use pink colors because you're talking to women. Be gender neutral. It's about, we're talking to the woman to address her challenges. It doesn't have to be pinky color that we use. Also, I would like to recommend a top-down communication internally, because when everybody in the financial institution is aligned with gender finance and the program is coming from the top of the pyramid, people will become advocates of the program and will understand how they are going to address the women segment. Bottom-up communication as well is good, to be able to learn about the challenges that your team may be facing on the ground and how your target audience are reacting to your offerings, so you can recalibrate as you go along in the program. And last is successful launching is important to continue looking at what you have, adjusting and recalibrating your offerings. So I will briefly go through this. The idea is for you to be always able to consider what you can do to engage with your women customers on a differentiated basis. So develop a holistic customer value proposition based not only on the female segment, but also on their critical life stages. When you understand and support women in their lives, you will create value for the financial institution and for the clients, especially that women appreciate a relationship-based approach to financial services. We recommend tailoring financial and non-financial products and services to meet the different life stages women go through, such as women starting or scaling their businesses. As I've explained earlier, it's not a one-size-fits-all strategy. So providing solutions to the different segments and based on their business life stages is critical. You may decide to start focusing on one segment, for example, let's say women micro merchants, and then scale to others. You may provide access to markets for these women by linking them to credible suppliers to source their products. You may as well provide training on how they can do their bookkeeping and how they can manage their cash flow. and finance their working capital at a lower interest rate with reduced collateral requirements. Another idea could be supporting women in buying a land or a house by offering a goal-based saving plan to save for a down payment, and then later on add a flexible mortgage if possible. For women caring for their children and elderly and facing health challenges, bundle a savings plan with an insurance coverage, which could be for retirement, education loan, or to even cover unexpected expenses or emergency expenses. I know that the main concern for you would be the resources and the budget to start and scale a gender finance program. So I'll share with you some quick wins. In terms of research, if you are constrained with undergoing a full-fledged demand and supply assessment, then you may start with conducting an internal assessment by interviewing your own women clients, looking at your own data policies and procedures, and doing your own desk research with a bit of mystery shopping to identify what are the competitors or what is the supply that's out there in the market. Then when you identified your own target audience, you will be able to develop at least one product at a time to be able to address the challenges that the segment you're going to be serving needs. Second, mobilizing your own staff may reduce on cost because you can identify experts you have internally who have the capabilities to develop and deliver, let's say, a financial literacy or bookkeeping or so digital skills as well. Third, to be able to maximize on reach, identify the right partners to work with who are already well structured and aligned to support your goals. So this could be faster to be able to reach your customer target audience. As for the service delivery, look into existing processes that can be streamlined for you to deliver an improved service. So digitization will significantly help as well. And finally, market to women using low-cost media such as radio, social media, and Google Ads. In summary, why is it important to have gender finance? To contribute to women's financial inclusion, which leads to their sustainable growth and develop the national economy, as we mentioned, to create differentiated competitive edge and become the financial choice of women in the country, to increase your client acquisition, activation, cross-selling, and to diversify your risk portfolio, which will all lead to an increase in the market share and will positively impact your bottom line. I would like to end with only a quote from the previous UN Secretary, Ban Ki-moon, Secretary General Ban Ki-moon. There can be no plan B because there is no planet B. So what's your plan to engage on gender finance today? The time is now. We don't want to wait 135 years for the gender gap to close. So women in Ghana really count on you. I will open up for questions now. Edmund, and thank you all for your time.
What presentation there by Maya. I want to listen to you more and more and more and more again. Thank you so much. There is something you said I love so much. % of family decisions are made by women. Women are very good savers, lower rates of NPL. And whilst we were making these statements, I was just looking at, okay, today, if I have a portfolio, let me just go and diversify it and get the women on board because they survival to my business. Ladies and gentlemen, I now open the floor. Those of us who have questions that want to ask. Okay, Roderick has raised up the hand. Okay, let me give you the chance for you to speak through. So Roderick, come through with your question. The chat box. You also have the chat box to be able to also send in your questions. And Roderick, your hand is up. Please, you can ask your question. Roderick.
Thank you very much, Eddie. And thank you very much, Maya. That was a very educative topic and discussion. My question actually is in relation to one, you know, microfinance sort of self-selects women. You have more women clientele when you use the microfinance methodology in providing access to finance. So in that sense, we seem to be doing something in that area. Why should we as an institution again have a top-up product that is looking at women when, for instance, within the rural banking sector, one of the tools that we are using is microfinance, which is also capturing more women than men. So that's my question. If you are clear about it. If I'm clear, sorry.
You're very clear, Roderick, and I really thank you for this question. So indeed, there is an automatic selection for women in microfinance, but are you addressing all of the needs of those women clients that you're looking at? Are you providing really what they need to graduate those women from the informal sector that they are in to the formal sector? So there's a huge potential in the market. Are you going to stay where you are today and let all other competitors or microfinance institutions or other development agencies take over your market share? So if you stay where you are, you will have a lesser chance of growing and acquiring a bigger market share. Looking at women as a whole, instead of only looking at one side or one aspect of what you are doing and being satisfied with that. I hope I answered your question.
Perfectly, perfectly. So thank you so much. Thank you so much.
Right. So thank you very much. King David, I can also see your question. You very soon. You have sent a question to the chat box. Let's listen to King David, and then we'll go to Eugenia on the chat box. Yes. King David, please, you can. Yes. Thank you.
Can you hear me, please?
Yeah, we can.
Okay, so mine is like a control. I'm unfortunately Microfinance Company Limited, and we clearly have a conscious, more or less, a policy direction where we direct majority of our funds to women and women-owned businesses. So for us, it's even part of our mission statement.
King David, kindly position yourself well. I believe you are breaking.
Can you hear me now, please?
Yes, we can. Yes, it's fine now.
Okay, so like I was saying, I'm fortunate to be with Innovative Microfinance. For us, the conscious effort we have done to improve women access to finance is a clear policy direction. So for us, it's even embedded in our DNA as an institution, as part of our mission statement, to direct majority of our funding to women and
David, you are gone. David, your system. I wait on David to come
businesses.
Okay.
On businesses. Hello?
Yeah, David, yes.
Can you hear me, please?
Yeah, we can. It went
at the
point.
Please?
Yes.
Wow, is it that bad?
Yeah, it's now good. We can hear it very clearly.
Okay, so like I was saying, for us, it's more like a policy direction for Innovative Microfinance. We have been in the business for 14 years, and we have made it a priority to direct most of our credit to women and women-owned businesses. So mine is like this. Because majority of our funding in terms of funding requests to or access to finance is directed to women and women-owned businesses, It means that we are prioritizing impact over profitability. And when this happens, it creates a certain form of challenge. So I am basically more or less want to find out, GAMFIN, what are other partners also doing to help partner innovative microfinance institutions who have come up with this very, very innovative plan or agenda to make sure that most of our funds are directed towards women and women-owned businesses. In this case, in the long run, we may be hurting, because in order for it to impact the lives of these women, to empower them economically, so that they can also have some leverage and have some form of power to be able to take care of their communities, we engage in a lot of financial literacy, financial inclusion programs and projects over the last 14 years. But at the end of the day, we are chasing impact rather than profitability. Mind you, we are equally, obviously we are an NGO, but at the same time, we also have other overhead costs that we have to take care of. So if we do this and we have access to other partner agencies who can be able to partner with Innovative to deliver this noble objective, I think it can help us. But currently, I know there are lots out there, but currently access to such partners is quite few. That's my contribution.
All right, thank you very much, David. Access to those information and data funds and all that is your issue. So Maya will want to do a quick response on it, and then we'll want to take it from there. Yes.
Edmund, I didn't quite get the question. I got that, yes, they are doing a great job on women, and I didn't hear the part on the question. So
okay, so he was asking that whether there are platforms where there can be partnership to be able to get access to funds, among other things, to support that, where their institutions have really picked up to undertake.
Okay, I don't have an answer for that, Mr. King David. So we have to look more into the context in Ghana on who are providing funds for that. But I know that if we discuss it on a one-to-one level, there are other types of partnerships that we can be looking at, starting with the GAMFIN and the First Plus program. So this is the program that will really help you or direct you into the right focus of how we can better do the gender finance program with the relevant partners.
All right.
Okay, so, thank you.
Okay, so let me also add a little bit, King David. I believe that currently we started running a training program, if you recall. And one of the things that we keep hammering is the fact that microfinance, one of the objectives of microfinance is to be able to reach women. And this is something that we keep reaching because, yes, indeed, there are some few donors out there that one way or the other, their focus in terms of support given to microfinance players has to look at how they can access funds to be able to support women institutions. So in this view, I think that we'll have a lot of collaborations in that area to ensure that at least we'll be able to get people in there to support that process. Not long ago, I had information also saying that there are going to be open sources there'll be more of open sources available for us after then we can be able to help us access more information finance within the sector. And we believe that some of these things will delve into what is happening globally and then see where we can also assess and support, among others. But I can assure you that we'll continue to support in that regard. That's from the area of GAMFIN. But we are going to ensure that the necessary support needed to be able to women into the scope, because the few things Maya just mentioned in the discussion tells us that there is a huge market that we have been given more concentration to. And I believe that some of the funders that come in also look at that as an example. I know one of them also, even the couplers also look at that also in a way. So these are some few things that I can share with you. Before we go on, I believe that whether you can be able to get information from other source of information when it comes to gender finance. Will provide you the needed information needed so that it will help us, help you to read more. Ahantaman, yes, we will share the information also on and you get from the beginning to the end. We are so sorry that other people could not join this wonderful discussion. I'm so with this information that I just want to even be a woman advocate for microfinance. I mean, in Ghana, maybe I'll be one of the advocate for that process. Thank you. Any other question, please? Any other question or contribution, feedback? We want everything in there, please. Any other information? All right, so I can see Johannes up. Christiana, come through, please. Christiana. Okay, it's gone. There are somebody said, and I love it so much. He said that Ghanaian women naturally don't like borrowing. I suggest we create a much awareness within the women fold to avail themselves for finances. Maya, so this is a very genuine information. I think Ghanaian women maybe love saving, but this is a very genuine information that has been put there. What can we do? Before you answer that question, I think I don't know whether you want to synchronize the two by listening to Christiana to answer those two questions. So Maya, what do you say? You want to also listen?
Yes, we'll listen to Christiana as well.
All right, then you bear the two. All right, Christiana, please come through.
Okay, thank you for the opportunity. I want to thank Maya so much. It's been a great delivery. I'm so proud hearing from my colleague woman. Yes, I'm very, very proud. I'm very proud to hear from my colleague woman on a great delivery as she has done. I think she has done justice to the aspects of women. Clearly, women, microfinance in Ghana is keen towards women in a way. But what I want to say is that, just as somebody has said, women are a bit careful in risk taking. And so you can see from the data Maya has given to us that when it comes to the NPL, it is quite low. Women not paying, it's quite low as compared to men. But we need to train
I think we lost you, or is it my connection?
Christiana, can you hear me?
Yes, please, I can hear you.
Yes, please, you can go on. Okay. Yes.
Yeah. What I want to suggest is that, just as my other colleague said, we think we are doing well, but we need some form of fun to be able to train. We have to train women in Ghana to really understand what it means to take a facility and to pay, so that fear they have of taking the facility to expand their businesses and also expand the scope of their families, because they are the main decision takers as far as the home is concerned. In line with these things can come up. So the institutions really need to be supported in one way or the other to extend their service to women by training them more to understand how to acquire funds and make good use of it for a better lifestyle. Thank you.
Thank you very much. So Maya, to wrap on with what Peter was trying to come out with. Yes.
So thank you so much, Peter and Christiana as well. Indeed, so there is a lot of awareness raising to be made. There's a lot of training to be given. Now, we have to find a way to do it in a much more cost-effective manner. This is why I suggested the online platform we discussed about digital financial literacy and digital awareness. I'm suggesting that let's start with smaller footsteps. So when you ask women to start saving, let them understand what budgeting is about, how much they can remove part of their money, the little money that they make, into savings for emergency fund. And then later on, it becomes a budget to open up a small business and accordingly. So I do agree with you. We have to start with smaller steps, go on a lot of awareness, and then move from how to save to how to manage your own business with the money that you've saved for it. Thank you so much, everyone, for your participation and for your amazing questions. If there is nobody else that wants to ask a question, Edmund, I pass it on to you.
All right, thank you very much, Maya. So once again, thank you for spending so much a wonderful time with us to deliberate on the win-win-win. It's not just one win-win-win, gender finance. And we want to say that we thank you so much for the inspiration, for the insight that you've given us in this area. But before we run up the curtain, I want to just make some few information available to you. There are informations that activities under the CAPLAS program that is taking place on the 26th and 27th. There is a risk management workshop at Sun Lodge. If you have not registered, kindly do so as soon as possible and be counted as part. It's a 2-day program. It's so powerful, packed, and you're going to enjoy more. But we've realized that majority of our institutions are having challenges in this area, management, and to be able to also deal with your NPLs, your non-performing loans. There are some few webinar sections which start on the 5th of May, where we're going to have a webinar on what the current state in the industry and how did we get there. We are going to have very wonderful leaders to take us through, very wonderful people, not only from Ghana, but outside Ghana, as a panel to be able to take us through this process. On the 24th of May, we are going to have strategies for controlling delinquencies and managing delinquency crisis in small institutions. So here we'll be looking at the tier 4s mostly as we deal with them, and on to look at the bigger giants, the microfinance companies, the savings and loans, and then that of the credit unions, and then the banks. There we are giving them 26. They are the larger industries, and see how best they can also deal with these same strategies that they can be able to use to control delinquencies and delinquency crisis in large, in their organization. Then on the first, we are going to have proactive strategies to prevent future. So you could see that we'll look at the state of the issue, then we'll look at how we can deal about it, and then how in the future we can take proactive measures today to be able to survive survive in terms of ensuring that our NPLs go for the future. So on this note, I want to say good afternoon. I wish all the best in all your endeavors. God bless you. Allah bless you. Thank you.
Thank you, Edmund, and thank you, everyone, and have an amazing afternoon.
Yeah, thank you.